Hi everybody, welcome back to the Lending Technology Think Tank. My name is Colin White from Credit Connect Media. Appreciate everybody joining us today. Hopefully people who saw the sessions earlier enjoyed this session on credit risk and then assessing affordability. Really interesting stuff there. Just for those of you who just joined us, a bit of information about the event and we've got information on the left-hand side there, so you can find out information about today's session. We've got a speech bubble, so we'd love to get your questions coming in as well at the end. As well, we've got a couple of polls on your thoughts on this session, so that'd be awesome. And then we've got speaker profiles, and then more information about our future events as well, which you can have a look at. So that's really good. So yeah, this session, we're going to talk about open banking, new technology. We're not going to focus on open banking. I think that's been talked about an awful lot recently. But yeah, we'll look at the new technology that's available to lenders and creditors out there at the moment. So, but I'll hand over to our able chair, Chris Warburton, who will provide more information on the session. And yeah, over to you, Chris.
So thanks, Colin. Welcome back, everyone. For those of you who didn't join the previous sessions, my name's Chris Warburton. I'm going to be the chair for the event. And a little bit of my background. So I've spent the last 20 years really in sort of risk operations, looking after and running everything from processes, adjudication processes, origination processes, through to the back end sort of credit and collections processes as well. And I currently run RI Strategy, and we've been doing a series of videos really sort of exploring the latest sort of innovation, technology, really across that whole space. So I'm delighted to be able to chair this today. And joining me today, I've got Andy Smyth and Caroline Ireland. Andy's from Initio, and Caroline Ireland is from Billing Finance. And maybe you guys just want to give just a very short, brief introduction before we start. Andy, do you want to go first, or?
Yeah, sure. So yeah, I'm the co-founder and chief product officer at Initio AI. We're using conversational AI to help people in debt to complete an affordability assessment. So we're working in the space of helping people to get through what is a very difficult journey of agreeing a new payment plan in a way that uses conversational AI to understand better what they are talking about their finances, and actually it fills in the form for them. It helps them to get that task done in a way that hasn't been done before.
Okay, so, Caroline, give a quick introduction.
So my name is Caroline Ireland. I work for Billing Finance. I've been in compliance for just over 10 years in property and motor finance. I don't profess to be an algorithmic expert, but I have a keen interest in the ethics of AI, and yeah, hopefully you can bring some perspectives from that point of view.
So fantastic. So, well, thanks very much. And I suppose there's been so much written, I suppose, around open banking, but just more generally around AI and machine learning the last few years. And I think the question I just want to ask, I mean, have we really seen the full promise of some of the stuff that's been sort of delivered, or is there quite a lot of hype still, or marketing at the moment? And like, what can we do kind of today, and where do we sit with it? Where we currently sit with the implementation life cycle? So today on this session here, we just want to talk about some of the new emerging technologies, and what's the reality of what is available today, and then where do we sort of see that going in the future? So, I mean, to start off, I suppose I wanted to just get a bit of perspective, and Andy, I was going to ask you, just to really, I suppose, around, AI, machine learning. I mean, where do you think the state of evolution is? And sort of, I mean, we've had a lot of hype. I mean, do you think we're now getting to the part where sort of like the rubber meets the road on it?
I think it's interesting. I think AI is probably used more in our kind of financial customer journeys than we might think. I know from experience using it within authentication processes to try and identify fraudulent transactions or fraudulent devices, that a lot of the time we had it running silently. It was learning from people's behavior and wasn't necessarily we weren't taking the score coming out of that behavioral analytics very strongly into account. We were still relying on sort of traditional business rules. And I think that's where you see the balance will start to tip, where there's a great industry in analysis and rules which tell us whether things are correct or bad or good or risky. And actually, as AI is starting to, we get confidence in it, then we start to give more weight to the scores that come out of it. But of course, it depends which part we're talking about. I think we're now so used to the way AI is used to promote things in a news feed or in social media. That's where it's completely, those engines are AI driven completely now. And different areas of different maturity. We're working in the conversational space, which is still actually not fulfilled its promise. It's still had a lot of hype around chatbots. And we've had experiences with chatbots which are pretty underwhelming. So we're now in the next wave of that, where actually it's the next generation of understanding, and that's exciting.
And where do we need to place? There's a lot, certainly in financial services, there's been a lot of sort of emphasis placed around transparency of decision making. So, and that seems like that's important in different processes to different lesser or greater extents. So, for example, if you're making a very hard decision, then maybe you want to have extreme transparency around why you made that decision, whereas some of the other ones you don't. We've probably seen it more used in the fraud area. I mean, sort of, how should we think about transparency of decision making within AI, or I suppose the process that sits behind it?
Well, I think it depends. I suppose it's the same transparency that we've always wanted to see in automated decisioning. Given that automated decisioning in credit transactions or mortgage or whatever it is about valuation of properties, it's always been a question of showing what rules have been triggered to the person. And we got to a point where things were very automated and there was an appeal process, and it was only during the appeals process someone would go and look and see why someone had been declined. And in some ways AI is the same, because you can see some of the reasons. The difficulty with AI is often, and it gets rather technical, that the layers, the way it's come up with the business rules isn't transparent. It's not easy to understand because they've not, the rules that AI comes up with is mathematical. It's not written in English, if you like. You can't look at it and say that failed because a business rule was triggered. It comes up with an outcome based on the mathematics of the best fit to a model. That's always been the difficulty with making AI transparent, is actually translating what the AI is deciding to make the best outcome. We might like the outcome. It seems to be statistically making the right decisions. But it's always very difficult to visualize the middle layers, and there's some good representations of that in things like object recognition and video. You can actually see what the middle layers are doing. It's fascinating, but it's not practically transparent.
And Karen, I was going to bring you into that conversation, I suppose, just around, the transparency piece. Where does the customer element in terms of demanding that transparency be versus what the mathematical piece is, which is, well, it's probably the right decision mathematically on the larger scale, versus it actually feeling like it's the right decision from an individual customer point of view? I mean, what's your kind of view on where we should draw that line?
I think the huge gap here is the average person's understanding. Now, my colleague Sam, who heads up our collections function, often reminds us, that the average reading age of a UK adult is 11 years old. So I think if you take the average adult as your barometer of what's comprehensible, and you overlay that with things like privacy notices, and kind of terms and conditions and all those various different things, I think it becomes really very complex. So there's two elements really. There's knowing it's in use, and then there's knowing the purpose that it's used for. And whilst I kind of take the point that you could kind of explain the maths and you could explain the process very well, where I think you've come into sort of difficulty is actually from a commercial perspective. You've got to be careful not to give away too much competitive advantage, and we see this when we're looking at kind of underwriting decisions during complaints and appeals and things like that. You've got to tread a very delicate line between keeping what's commercially sensitive closely guarded, but also being open and transparent enough that the customer is able to kind of question it. I think the fundamental issue for me is that we're still trying to make sense of human intelligence, and we've been on the planet for 200,000 years, and there are a lot of gaps in our own understanding about our own brains, and I think my worry therefore is that it becomes uniquely complicated to try and unpick the reasons why a certain thing happens from a machine learning perspective. And I think to pick up on the point that Andy made earlier on about news feeds and kind of how algorithms and AI works in, for example, the social media space, if we ask ourselves the question, well, has that been for the good of society and for the good of the individuals within society? I think you'd have a really broad spectrum of opinions and some pretty extreme cases for we shouldn't touch it, we should leave it alone, or actually there's a lot more usage that we could be getting out of this.
Do you think that the fact that we are seeing automated decision making, I prefer the term machine learning to AI personally, but like as we're seeing that sort of in use on things like social media feeds and those sort of things, and we're seeing it much more, even in terms of like some of the visual recognition, do you think that's going to weaken some of the resolve maybe around insisting on transparency in financial decisions, or do you think it's going to be a limit to growth? Do you think it's a hard and fast limit, or do you think we're going to see some weakening?
Sorry.
I think my view is that it's at the moment people's understanding of machine learning and AI, it's really that there's this sort of one size and one shape of model. And it's like anything, there's different uses for it in different areas. Within decisioning, it's rarely 100% making the decision, actually. There are other factors which are generally, there's either prerequisites to accepting an application, and there's often compliance, checks made before an application is accepted. And there's almost invariably some other factors as well. It's not usually the only factor being used. But I think in the end, because it can do a better job of modelling what the business rules should be for an outcome, it's inevitable that it gets used everywhere where there's the data to support it. Where there isn't the data to support it and there's still subjective decisions to be made, then actually it's not the right tool for the job, and you might find that doesn't happen. And that might be interesting around once you establish things like vulnerability in customers, then suddenly it becomes a tool which is just not going to be appropriate because everyone's vulnerabilities are different and the combination of vulnerabilities are different. So there are some places where you can see it needs to not be used because it's not going to be the right tool for the job.
Mm-hmm. And it's quite an interesting concept in terms of like, well, how much do we actually, and we talked about this in one of the earlier sessions, how much do we actually go back to relying on an individual almost like as our default, right? As the agent becomes the default versus relying on the maths. And then at what point does that there really become the difference between the two, other than the agent can sort of justify it in a human way of why they made the decision, although the logic might not actually be as good as the mathematical model did as well. Do you think we're ever going to get to that kind of point? Or is it just a comfort level, I suppose, just having a human that's ultimately involved? I mean, is that your kind of view, Caroline?
I think the way I see it is kind of referring back to this Pareto principle of 80% might fit the model of what you would ordinarily do, but it's knowing when to take it out of that process. I mean, I think just on the point about kind of machine learning and outcomes and things like that, I think that's quite difficult with some of the use cases that it's for. So, for example, financial crime. If you kind of prevent somebody from borrowing or you exclude them from the investment market, but it turns out that actually that person shouldn't have been, how do you square receiving that outcome back in order to inform the machine learning? I mean, I'm always an advocate of human involvement. Sorry, that's my son in the background, because they can get to grips with that context perhaps in a much more effective way. Humans like other humans, and I've personally experienced having arguments with chatbots because I just don't feel understood. And so I would tend to want to do it the way round that we've discussed, or the traditional way round, I suppose, where your speech recognition kind of identifies what is a trigger and then needs to be taken out. But I think you always need to have those checks and balances to make sure that language changes in society. So as language changes and the use of language, then you're going to have to either have a way of informing the machine learning to detect that, and I don't know how that would work technically in the background. Perhaps you could answer that.
I suppose, Andy, I mean, where do you sort of think the state? I mean, lots been talked about, so conversational analytics and those kind of things. I mean, and it feels like that sort of. I mean, how evolved do you think we are with that? I mean, is that sort of the new frontier that you're sort of seeing sort of building?
Historically, there was a big moment in 2016, 2017 when chatbots were suddenly going to be the new way of interacting with the internet. And Microsoft said as much, that they saw it's the future of the internet. And what we've seen since is we've come to know what chatbots are like. They tend to be looking to help you with the common tasks that customer services would deal with. And they're terrible at everything else. So they're good at saying, it looks like you need to reset your password. Because if you do need to reset your password, they're probably right. But what we find is as soon as you ask them two things at once, as soon as you've typically already gone and tried resetting your password and that didn't work, you find the chatbot is just a barrier to getting through to someone that can probably help you. So they've ended up with a very, very bad reputation. And the way we've approached it is to go back to the start of that process and say, actually, how can we train conversational AI to understand better? And it's not by using like a chatbot framework where you say, well, these are the different decision tree routes. It's not an IPR on a telephone system. We've built it based on people actually talking to an income and expenditure form. So getting people to talk about their income and their expenditure. And from that, we've built a language classifier, which allows us to know that people talk about two things at once. And people will talk about specific items like spending money on vaping or Netflix or Now TV. And we categorize those things into the right place onto a standard financial statement form, which is what our clients need us to get done. But actually, we also capture that data as well. And by building from that very specific use case, you can have a much more in-depth conversation with people. It's actually the generic chatbot frameworks, which we're finding are promising too much. And they're very easy to break as a user. I mean, as soon as you recognize it's a robot, you almost start to have to be robotic in response, and that's not how we've built this at all. We've been looking to actually just let people talk naturally, but actually we're having to teach them to talk naturally because nobody does talk naturally to chatbots anymore. So we've got this strange user experience problem that we're addressing. We're trying to persuade people to just not talk like you talk to Alexa, or Google, and just actually use plain English and just talk about your finances, and that's quite difficult to do.
It's like the same kind of journey you had when, like when you're searching on Google or search bar, you actually type it in query language almost, rather than with keywords, rather than natural language. Although you can do the latter, can't you? So it's like I just program I'm putting in keywords, right? So it's like obviously interpret that I know that I'm talking to the machine rather than talking to another human.
And search is very specific. When you type into Google, it's almost like you learn how to make Google work really well. By putting in the things that you're trying to look for, like how to do something, and you'll find stuff that tells you how to do something. So you've got how to at the front. You don't say how do I, you put how to change a wheel or whatever. And actually to wind people back from there, to get them to talk to like Google via voice, where you might actually just say to Google, I won't say the trigger word, but how do I change a wheel? But we all know that at the moment that's not necessarily going to get you the best answer, because we all know behind it is a search engine, and we've sort of learned the best way of doing it.
So if we train the machine, or the machine's trained us? That's a rhetorical question.
Absolutely, yeah. We've been trained, sadly.
So I suppose, so you can sort of see where the evolution is going. I suppose the other thing that comes up a lot when we're talking about machine learning is potential bias in models as well. And I want to sort of touch on that a little bit. So there's been quite a lot written around that, particularly in terms of financial models and decisioning type models. Is that how much of a, and it feels like that's kind of gone away a little bit over the last sort of 6 months. Maybe with the pandemic, it's sort of like had less of a profile, but that still feels like that's still in the background. How much of a concern do you think that's going to be? Caroline, just sort of going forward. How concerned are you guys with that?
I think it relates really well to the kind of ongoing conversation about diversity and inclusion. And I think any paper that I've ever read on AI says that the key to this is making sure that you value representativeness at the point of design and at every stage thereafter. So it's about making sure that kind of cultural variations are accounted for. You've got to make sure that you kind of comply with the the Equality Act. So if you detect a spelling mistake or some kind of error, it's not necessarily a signifier that it's fraud at all, but it could be some other dyslexia or something similar. I don't necessarily or didn't used to see many people like me working in the technology industry, and I'm pleased to see that that's changing. But critically, I think it's humans aren't particularly good at being aware of their own biases as it is. So I think there is a risk that those get sort of built in at the design stage. So I guess my approach to this potentially would be looking at, what do your base rate outcomes look like with kind of no intervention, and then making sure that no group is being, disproportionately harmed or has disproportionately worse outcomes than what you'd see naturally. I mean, I think if you're using AI and machine learning, that's obviously quite difficult, and the context of how financial services is offered and how how society has changed vastly over the last 10 years, can you really draw a neat comparison between the two things? I mean, as with anything, I think the answer is making sure that you are aware of all the potential pitfalls for all of these kind of different user groups, and making sure that you've got those appropriate checks in place to make sure that, what you expected is actually what happened.
There's an interesting example I was actually reading the other night, which was actually talking about scanning. It was scanning X-rays for COVID symptoms, and it was actually the text that was on the X-ray was actually indicative, because there were some hospitals that had higher instances than others, so it poorly trained the model, and it was the text that was in. I mean, they obviously caught it, but I mean, I suppose that's a that's a naive example, I suppose, compared to some of the more complex like social issues we've got. I mean, Andy, I mean, how much do you think that's an ongoing issue, and how much do you think we're overcoming it? I suppose, and awareness is probably the first step of it in terms of like really understanding bias.
I think the problem with bias in AI is that to overcome it, you actually have to bias the model. So machine learning learns from a set of data, and typically you've got a big training set of data, which hopefully is representative of what's going to come through the door when you actually use the model later, and you have a smaller testing set. And most of the examples where the outcome has been biased is where actually the set of data is not what you want the outcome to look like. The classic example was the LinkedIn example, where they looked at people's names, and there was a male bias to the way it was categorizing people. And it was because the set of data they're using is the existing set. So you actually have to introduce bias to move it, which in the same way actually we've had to do to get minorities in certain subjects like STEM subjects. You actually have to do this positive discrimination in your training data if you want to bias the outcome in a way that makes the outcome fit what you want it to look like. If you let it happen naturally, you'll repeat what you've got, right? Because it's a mathematical model. It's one of the things to watch for is people use the term algorithms about AI, and algorithms are traditionally a developer writes down a set of instructions. That's what an algorithm is. And hence, if it doesn't work or it has a bias in its outcome, it's because of those instructions and how they were written, and it's controlled. What AI does is not do that. It uses mathematics to look for the local minimum in the calculus behind it. And so the data you put in is what you're going to get out. And if you have a data set which has minorities in it, they will come out as minorities in the outcome. And it's not that the algorithm is biased, it's actually that the data set has a bias that you don't want. And to fix it, you can't change the algorithm like you can in a normal program. You can't just write a rule that positively discriminates. What you have to do is change the data set. So you have to positively show those minorities to be majorities or equalities in the data set, and it'll learn that they are equal. And that's how the outcome works. And to do that, you're biasing the data set. So it's a rather odd situation where you have to put bias into the data set to actually deal with what we consider to be biases in the outcome.
And I suppose to a certain extent that comes back to having the human involved in the setup and the modelling, and making sure they understand that, and making sure that they're understanding and modelling it.
Yeah,
and factoring that in.
Absolutely. I think the interesting thing, and it's a bit of a tangent there, is when you get into what they're doing in psychology with AI, because what they've suddenly realised is that because the AI doesn't need to be told what the rules are, it's actually now coming out with theories, and it's coming out with new drugs without being told what to do, because it's using the mathematics of it to build proteins or come up with theories based on people's CAT scans of the brain or whatever. So it's really interesting when you get into the more creative use of it, where we suddenly realise you don't have to control it to get new theories. It can actually be created. So that's a whole nother topic, I guess. Not particularly in finance.
Yeah, computer-generated physics theories will be with the next one. But I suppose if you get the bias right, or if you get eliminating the bias right, I should say. I suppose one of the advantages you get is if you're getting better decisions. I mean, I suppose it can give you a greater order stability, I'd imagine, in terms of decision making if you're using the machine than using the human potentially. And if it's more accurate, do you rely on that or not? Which comes back to, I suppose, to that earlier question. But you have the repeatability with it.
I think there's an analogy with AI, which is a bit like the way we if you have a fund manager managing a fund, they can use their experience, they can use some maths, they're going to look at past performance in order to know what the right decision is to make next. And actually AI is doing the same thing. The outcome is often based on that data they've got. If past performance is what you use to judge what you should do next, then obviously the past performance has to be indicative of the future. It's no different, really. In that sense, the AI is just doing the same job, but doing it, mathematically, rather than doing it more subjectively. And sometimes it's better, sometimes it's worse. But if what's happened in the past doesn't indicate the future, then AI is no better than a human at doing it. It's the same difference.
Which I suppose, if you're listening to some of the other sessions, is an interesting point where we are now in terms of whether the past does actually indicate the future and whether the models are actually effective or not, which is one of the discussions earlier.
We see that with fraud rules particularly, because the fraud rules we set up for financial transactions assume that it's not normal for people to suddenly take everything out of their bank account. And then you have a war in Ukraine and people do a run on the banks, and the fraud controls would stop you taking the money out. And actually that's a false positive. That's a false fraud control that's kicked in, because it is reasonable at that particular moment someone wants to take their money out of the bank. Different. So you're right. The events that can happen, if they're not normal, then actually the models don't work well at all, and humans do have the ability to go, okay, based on breaking news, I can make a different decision about whether to allow you to withdraw all your savings.
Yeah, which I think, Caroline, you probably agree with that, I would think, just from what you said.
Absolutely. I mean, I think humans are fundamentally flawed in that they will often make what they think is a rational decision, but based on emotions, and this kind of takes it out of that. And I'm pleased you kind of referenced I think you alluded to sort of news. So my understanding of what certain machine learning can do within the investment space is look at performance against headlines, certain keywords in headlines. So in that example that you use, if the machine learning knows that actually the context around us is changing, therefore the inference is that the behavior changes, and then that's great, because it stops humans from falling into those traps. But is that morally right? That's part of what makes us human. That's a bigger question than I can answer.
And in terms of the amount of data that we're using, I mean, do you think we've still got more to go in terms of data? I mean, certainly in terms of, we talked a bit about open banking, and there's a question here just around whether we're even using open banking effectively, and that came up in one of the previous sessions as well. It's like, are we making enough use of the data we've got today? And then, if not, I suppose, or what are the new data frontiers that we've yet got to explore? I mean, Caroline, do you think we're using enough of the data that we've got today, or do you think we should be going out getting new data?
I think that probably is going to be very much dependent on the firm and the subsector of financial services that they work in. There's loads of data absolutely everywhere. So is there a risk that you cast the net so wide that you're trying to manage so much that it becomes essentially useless? I mean, the FCA hasn't been shy about saying in pretty much every paper that it's written, certainly in consumer credit, that management information needs to improve. So, and this is something the regulators have been saying since, certainly in the consumer credit space, since 2014. So, we don't. I think it's a concept that's still pretty alien to us. If I'm completely honest, and it is such a complex subject to try and understand as a layperson, that I think there's probably a natural tendency to shy away from it. And I'm an advocate of it. I think that the most exciting use case that I'm personally interested in is the analysis of unstructured data and speech and kind of vulnerability complaints, all of those things that are very, very hard actually for an employee to do, and are becoming increasingly difficult in financial services, having worked throughout a pandemic, and having potentially, low personal resilience. So I think there is a lot that we could be doing, but I think you have to do something effectively. You have to really understand what you're managing, and I think it's a little bit opaque even to some of the professionals at the moment, if I'm honest. Open banking, I think we're pretty much just about knowing what that means, but the other sort of two concepts, slightly more, I think, ethereal, if I'm honest.
It does sound like, so a little bit of your opinion is also like, there's also a bit of sort of almost like basic blocking and tackling that we still need to do. So as much as, we can look at some of the new things, there's also around looking at things like, management reporting as an example, and going back and making sure you get that right and the process right.
Yeah.
And I suppose it's then getting that right and then overlaying some of these new techniques in. Okay. I mean, Andy, what's your kind of view in terms of, I suppose, the next kind of frontier? I mean, obviously you guys are looking at, voice analytics and conversational analytics and those kind of things, which is sort of like, it's almost like an extra layer of complexity in terms of data, but also data you can probably extract as well, I would think.
It is. I mean, we started this process, and Initio was about whether we could use conversational AI to help people in debt. And we started off, the journey for us was then to do some user research and meet with people who were in debt to understand the debt journey. And almost as an aside, universally they felt that they were embarrassed about it. They failed their families, and the last thing they really wanted to do was talk to an agent about their income and expenditure. They feel like they're being judged. And so we knew that by trying to make that conversation work better on an automated basis, as soon as we showed them what we prototyped at the time, they were like, yeah, actually that's different, that would work, because they don't feel like they're being judged when they've got a conversational AI agent that you can talk to naturally about things. What we've discovered out of that being a really useful solution, and that's where we are now, we're putting that into practice, is that actually when people start to talk to us, we understand it at a lower level than is captured currently. So if you talk to an agent over the phone and you talk about your finances, they'll probably put, if you talk about Netflix, for example, they'll probably put your Netflix bill on the right place on the standard financial statement. So at the end of the process, when you put the phone down, they'll just have a box that says broadband, TV and internet package with a number in it. And the business has lost the fact that it was Netflix they were talking about. And so we're the first people that have said, actually, we can transcribe in real time and tell you how much they're spending on Netflix versus Now TV versus Amazon Prime, or vaping versus smoking we always talk about, because that could be an actual real factor in terms of analytics. So that for us is kind of the frontier of how we help people to get a really difficult job done. And we get new data out of it, which is really interesting. We don't know quite how that data will get used. We know we can start to do our own machine learning on what are the common limits, how much do people normally spend on these things. We'll start to get data that's not been found before. But also there's a whole vulnerability piece for us, because in interpreting those conversations, we will be listening to people saying, I've lost my job to COVID. And those things we can pick up because we're understanding language to that degree that we can pick up these FCA vulnerability factors and feed them back to our clients, who can then kick in whatever the policies are around it. We've been talking to the Vulnerability Registration Service about we might be at the front line of hearing about someone's vulnerability, and then our client can actually register that with the VRS, and that means that the next person they go and talk to knows about a vulnerability that's not been discovered yet. We know that they may share that with the agent, the AI agent, in a way they may not have done with a human agent. So that's the space we're sort of working in, which is where you can have someone helping you to do what is a really difficult task any time of the day or night, rather than having to do it during business hours with a call center agent, who themselves may not put things in the right place. And there's a whole compliance issue around their behavior, whether they lead you in terms of what goes on the form. So that's the space we're working using conversational AI.
It's quite interesting in terms of like the voice piece. I mean, and an agent, or if you're talking with a customer anyway, you just naturally, as humans, we do this. We're human gathering, data gathering sort of machines to a certain extent, but it's around trying to capture some of those extra pieces of information, like the subtle things that are said that actually become quite useful information, which is the value often of talking with a human as well. And it's trying to it feels like that's starting to sort of become a little bit more sort of digitalized or becoming a technology rather than just being reliant on the humans to a certain extent. It's starting to touching on it a little bit.
We certainly see the call center teams, if we can get it right, becoming the specialist team that deals with the vulnerabilities, whether we know them in advance because of a system like VRS who might tell us that they've got vulnerabilities, or whether we discover it very early in the conversation with them and we can then effectively escalate it to a human agent if that's what needs to be done because of the vulnerability we find. That's on our kind of roadmap of what we do.
And I suppose going even further from that, I mean, where do we go? So we're talking about voice. I mean, you can go to video as well. And there's quite an interesting chat I had with someone who was talking a bit about in the fact that you have almost like complete video, and it's not just what we see, because we selectively see things, whereas a video sees everything. And does that become a privacy risk when you're not just focusing on the way someone's looking at, but also what's in their background? You know, I've got a picture of a mountain here, and that become interpretive around a particular situation, right? So, I mean, is there a privacy and an ethical kind of decision that we're going to sort of bump up against? And maybe Caroline, I mean, your kind of view on that.
I think it's possible. You know, you sort of, talk about those non-verbal cues. So somebody who might be looking in an opposite direction, or, you know, we do pick those up as humans, but we're not necessarily attuned to it. But I think then it's, you know, how do you layer the right meaning over that? Is that somebody not listening to you, or is it that they have an autism spectrum disorder and they find eye contact difficult, or like me, I stare at people for ages and I don't realise, you know, what is the intention behind that behaviour? I think also there's scope creep with any of these things, that what you initially tell somebody or maybe don't tell somebody you're gathering data for, then, you know, you start to maybe use it in a way that it wasn't intended to. But you know, I know we're not here to sort of talk about open banking per se, but I'm personally of the view that the reason that this hasn't taken off in quite the way that the enthusiasm around it 5 years ago would have suggested is because this is very intrusive, and how you spend your money says a lot about what you may or may not do in your personal life, what subscriptions you have, how much cash you take out on a Friday night, whether you're paying rent on a property in addition to a mortgage and having a secret life. So. And people are more guarded, I think, depending on their level of trust in financial services and the necessity. I think there's the necessity of this. Well, you know, I'm perfectly able to have a conversation about my vulnerability. I don't need a kind of robot scanning me, and that is what the average man on the street perception, I think, would be, which is why it's really encouraging actually to hear that Andy's approach is that you're listening to a natural conversation. You know, you're taking all of your data from how things would happen ordinarily, but using that as a way of flagging to where you can have that more sort of human, emotional connection. You can't connect emotionally with machine learning or open banking or any of these things, and that's why I think it's uniquely useful for speech and conversation analytics, because it puts the right people with the right people to have the right conversation, you know, in the right way, which is really, really hard, I think, and has been particularly difficult over COVID with phone lines closed and, you know, branches of banks shut and things like that. So
there's two or three things to pick up on there, which is quite useful. One is right back, Chris, you were mentioning using video. One of the interesting things that happened during COVID that I read about was PayPlan as a team of debt advisors who started to use Zoom. And one of the practical things they started doing was sharing their screen towards the end of the call, so someone could actually see the form that was being filled in, which is actually a really practical thing that they found. But it'd be really fascinating to talk to them about what the difference was having a video call with someone over a call center. The other piece is that actually in call center analytics already, not in the field we're working in, but call center analytics is already looking at assessing people's mood from the tone of voice, from the tone of voice, or from whether they are being talked over by the agent. Those things are already happening, so people may not be aware that analytics is already in flight. I've not heard of using video yet, but I absolutely can see that if we took video in and used it to then train an AI engine, it will include, and it might say that, people that have pictures behind them in video are a better risk than people that don't have a picture behind them. or might be in silhouette, might be dodgy. You know, all those kind of things come out of video.
I'm not sure about that given my picture, but
I know I'm trying to mine a fake, so I can't speak on that.
So, and I suppose I just want to sort of loop back on this whole conversation in terms of, I suppose, you know, the digital side of things, machine learning, new technology, the human piece of it, and going back to things like, I suppose, you know, consumer duty, you know, and some of that, and some of the involvement, and from making sure you're not creating harm, I suppose, longer term, or looking for good customer outcomes. I mean, how does that sort of like interlink? And we're going to have to see these things interlinking that much more sort of as we go forward into almost like a new world, particularly in the UK. Any thoughts on that? Or
I'm slightly depressed actually, because this is a theme that's been running through the banking industry for 20 years, treating customers fairly, and it seems that the automation that's been brought in has not changed it vastly. I mean, in the debt space that we work in, when we actually reflected on it recently, we realised that the customers we're trying to help are considered to be subprime. I mean, all the language around customers in debt is terrible. They are delinquent, they're a problem case, they're a bad risk, they're not in good standing. They don't talk to the customer services team anymore, they're in collections, and their cases need to get resolved. It's just the whole thing. If you look at the human bias around how we treat people once they miss a payment or haven't paid a bill, our whole attitude changes completely. And what we're finding is that by having a virtual agent which doesn't have all those biases built in, it doesn't consider you to be a bad person. If you talk to it about what you spend your money on, it'll put it in the right place on the form, and you get to look at it and you get to check it, and you're not being judged by the person on the end of the phone. And unfortunately, that creates an attitude as well in debt advisors on the phone where they've heard all the excuses before. You know, they come in, you know, battle worn really, by saying, well, I've heard someone say, yeah, they'll pay next week. We can take some of those things away by putting automation into this space. And it actually might be quite useful in this kind of near prime space, where actually near prime customers we consider to be a very expensive set of customers to engage, because the credit reference stuff doesn't give you an easy path to, you know, automatically accept them or give them a credit limit. And yet actually there's now cost-effective ways you can automate the conversation you need to have. That's where we see this starting to add value. Towards the end of the collections journey, it's just very difficult. And the vulnerabilities kick in to such a degree that actually it's useful for us to take some of that emotion out of the equation so they can do something very pragmatic with us. But it's still just as big a step for them to actually engage in an income and expenditure assessment. It's a huge psychological step. So most of our work is honestly not in AI. It's in user experience and behavioural science, really, of how you get people to engage.
And Caroline, maybe a final word on outcomes and technology and where we sort of like sit with that.
Well,
Good outcomes, I should say.
In outcomes, I mean, I think I looked at what the government's position on AI was, and they have this set of what's called some principles, and you probably know about these, Andy, to respect the dignity of individuals, to connect sincerely, openly, and inclusively, to care for the well-being of each and all, to protect the priorities of justice, social values, and public interest. And I think fundamentally, if you know anybody designing, using, operating, assessing, being accountable for any kind of AI, machine learning, and that type of technology follows those principles, then I don't see how it's possible not to comply with the consumer duty and achieve good outcomes. But I, like Andy, do find this idea slightly frustrating, because I don't think we should be doing in the new world anything differently to what we ought to have been doing for the last, well, certainly since I've been in finance.
Okay. Well, thank you both very much for joining us and talking through the topic. I think some really interesting topics to talk there, and I know we sort of talked a little bit more widely and you know, around some of the things that could happen in the future as well, which I think is fascinating, right, in terms of some of the inflection points. So thank you both very much, and really appreciate it. So see Colin's appeared, and which probably means we're at the end of the session. So Colin, I'll pass it back to you.
Thanks, guys. Thanks, Chris. Really interesting and a different angle on the AI and machine learning. Fantastic to hear from Caroline and Andy there. Really appreciate their efforts as well in in putting out the stops to be part of today's event, because I know it's been difficult for both of them and filling in the time. So really appreciate that. Thank you to them both. We're going to wind up now for another 20 minutes or so. Our next session at 1 o'clock will cover new generations in lending. We've got another good panel for that one. So yeah, if you want any more information on today's event or want to get in contact with our speakers and any further thoughts you've got beyond the questions, and let us know. But I'll round up by thanking Caroline and Andy for their time, and of course Chris for chairing that session, and we'll see you shortly for those of you who join us in the next one at 1 o'clock. Thanks a lot. Cheers. Bye.
Much.
Bye.